Question number 3. Okay, what have we got here? Okay, we've got Gumtree's Proprietary Limited is a small wholesaler of electrical products imported from overseas. The business was started by Charlie Yuka, and has rapidly expanded to 15 people, employing 15 people. There are 15 different products in the range and they are distributed around Victoria by the 3 warehouse staff. The goods are sold on credit. Okay, that's a piece of information that I might be interested in, with only a few customers being cash only. The current terms are 110 net 30. Does everyone understand what 110 net 30 means? You get a 1% discount if you pay within 10 days. If you don't pay within those 10 days, please pay within the 30 days. The accounts receivable person is Nicole, who deals with these customers when they turn up to pay their accounts. She collects the cash, adjusts the account, holds the cash in a desk drawer at reception until Friday when she completes the banking. She's got a few roles. When she is absent from her desk, Helen, the receptionist, assists the customers with their payments. Nicole then prepares the bank reconciliation, which Charlie authorises once per month. As she has been with the organisation since inception, Charlie trusts her and doesn't often look at the reconciliation. Ooh, silly Charlie. But just authorises it. Nicole then adjusts the accounts receivable balance and writes off any doubtful debts. And what we're given here is, Nicole is sick this month and Charlie has asked you if you would assist with the accounts receivable function. So we've been given some outstanding balances at the 31st of May 2018, and they're as follows. So we've got May's, April's, March's, February's and older than January and older. And as at the 31st of May, there's a $1,600 credit balance pardon me, in the allowance for doubtful debts. The entity uses the ageing of accounts receivable basis for estimating the uncollectible accounts. Gumtree Proprietary Limited estimates the bad debts are as follows, and it's given us some percentages for what's going on here. Determine the total estimated of non-collectibles. So that's the first thing we'll do. So let's just focus on this one first. Total estimate of non-conceivable. So what we're really doing is we're marrying this information up with this information to find a balance that'll be outstanding or should be outstanding that it's not going to be collected. That's what we're aiming to do. And we're going to put it in as a part of our allowance for doubtful debts, which is already at $1,600. So first things first, I'm now going to list out some information, and it's just this information here. So May, April, March, Feb, and I've picked up the wrong pen again, January, plus. Okay, so, and I've got 105,000 for May, 32,600 for April, 7,500, 5,000 for February, and 3,750 for January and older. Now I'm going to, because obviously the older the accounts get, the less likely you are to collect it. That's why this number rises for accounts. So my current account, which is May, is my percent, is how we're going to calculate our non-collectibles. Now I'll bring that back down on the page so you can see it on the screen. So I've got 0.5% here. I've got 2% for my next one, 3% for under 60 days, 9% for over 90, under 90 days, and over 90 days it's about 70% of uncollectibles. Now really all I'm doing is just doing these times these to give me a total. Let's have a look at what we get. Okay, can you guys see what's happening on that calculator screen? No, here we go. All right, let's see if we can get this working. 105 times 0.05, 5,250. What do we got next? 32,600 times 0.02. Now this figure, yep, Yeah, I did it by, yeah, thanks very much. I just picked that up myself. But it's good to have a second pair of eyes watching what I'm doing. Yeah, that should have been, I think I put 0.05 rather than 0.005 in. Yep. 7,500 times 0.03 is 225. 5,000 times 0.09 equals 450. And my last one, which is 3,750 times 0.7 equals 2,625. Now if I add all those up, 450 going up my list, plus 225, plus 652, plus 525, gives me $4,477. And that's the first thing. I've determined the amount of non-collectibles. So I've determined my non-collectibles there, so that's A. The next bit, it says, prepare the adjusting journal entry as at the 31st of May 2018 to record the bad debts expense. Okay, so my it's told me to record a bad debt expense. So this is B. So that's my description there. And I've got my debit column and my credit column. So it's time to record a bad debts expense. Now, just working it out down here, I got 4,000, actually I worked it out in red pen. I got 4,477, but I've also got 1,600 as a credit balance already. So I'll take that 1,600 off, and that should give me 2,877. So that's my bad debts expense. And what I'm now going to do is I'm going to have an allowance for doubtful debts, which I'll take off my accounts receivable balance, and that'll be for 2,877. And that is part B. So we've done part A and part B. Now let's have a look at identify the principles of internal control violated in the above situation and discuss the possible consequences. Okay, so we've got 5 principles of internal controls. Can anyone remember them? Okay, if I go for C, I've got establish responsibility. I've got segregation of duties. I've got documentation and procedures. What's my fourth one? Physical controls. Well, they're actually physical, mechanical, electronic controls, but I'll just put physical controls here for the moment. And my last one is independent verification. Now let's go back to the story a little bit. We've got this person here. The accounts receivable person is Nicole, who deals with these customers as they turn up to pay their accounts. Now, first things first, if she's accounts receivable, she shouldn't be involved in the collection of the money. She should just be involved in the recording of what was collected. She collects the cash, adjusts the accounts, holds the cash in her desk drawer, completes the banking. When she's absent, there's someone that takes over to assist the customer with their payments. Her name's Helen. But Nicole also prepares the bank reconciliation, and Charlie authorises this once a month. Okay? As she has been with the organisation since inception, Charlie trusts her and doesn't often look at the reconciliation. And then she adjusts the accounts receivable for any doubtful debts written off. So Nicole's got a lot of responsibility there. Too much for my liking. So, need to establish more responsibilities. What can happen here is fraud or unseen error. So it's a possible item here. Plus Helen is shouldn't be responsible for the collection of accounts when Nicole's not at her desk. Segregation of duties. Nicole has too many duties. In the finance function, you want to separate your responsibilities or have a segregation of duties, so not one person's in control of everything, because it's easy to rip people off that way. So what's the consequence? Once again, fraud or error. Documentation of procedures. There's no real documentation of procedures here, as Nicole seems to be doing everything. Nicole seems to be doing everything. So documents, there's a big question mark around documentation procedures. What's the outcome? Once again, fraud or error. Because people do make honest mistakes. Physical controls. Holds the cash in her desk drawer. Doesn't tell me if there's a lock on that cash desk drawer. So no controls over cash. No physical controls over cash. It's kept in a drawer. And that's at reception. So what's the possible consequences? Well, whenever cash is lying around for a little bit, someone befriends it and takes it away and keeps it company. That might not necessarily be an authorised person, so we got theft there as well. And the independent verification, there's no verification of what Nicole does. So from the point of collecting the cash to all the way through to the banking, there's no independent internal verification. There's no passing on of the process. And Charlie doesn't look at the reconciliation. So you need to look at the 5 independent internal controls. If you just list them, you're not going to get too many marks because everyone can memorise those. You've got to actually understand how they work. So you've got to tell me where they are in the story and what's the possible consequences. Okay, so the last one would be fraud or error. So once again, that would be the consequences of having weak internal controls.